Good morning again. We are now Thursday, August the 14th, and we've had some fireworks this morning. On Tuesday, the CPI came out, and it was a little better than expected. Surprised us a little bit with better news. Today, PPI numbers came out, and they were the opposite direction. They were expected to be up a little bit. Instead, they were up more than expected, up quite a bit. You can see that our just July PPI up 0.9, core PPI for July 0.6, year over year was 3.3 versus 2.3. That's significant. And the core year over year 2.8 versus 2.5. So not exactly what we were hoping to see. These PPI numbers are released about an hour before market open, and you can see the reaction was immediate, and then we seem to, at least for the moment, are trying to hold this area here. Now contrast this with last Tuesday. It was a similar kind of thing, just going the other way. Information came out, it was good, we shot up immediately, we built a little bit of a base and moved up from there. Yesterday we had the three Fed presidents talking, reached a new all-time high. We're up a little bit for the day overall, not too scary. And since then we were just waiting to see what the number would be, and down we have come. Notice that at least for now, we are higher than we were on Tuesday, even after this bad news. Now that won't necessarily hold, but it's encouraging that it has so far. Now something else I found a little bit surprising today. Um, of course, when we see inflationary numbers like this, given everything else that's going on, immediately we start thinking tariffs. The tariffs are evil, the tariffs are the cause, the tariffs are giving us inflation. Maybe, at least for the short term, it's easy to see how that can be the case. Tariffs are increased, countries jack up their prices to cover the tariffs. We, the consumers, pay for the tariffs, and we're hoping that there's benefits down the road which outweigh the immediate inflation impact, the immediate negatives to the economy. We'll see. Time will tell us. But another thing that surprised me this morning, interest rate futures are still indicating, in fact, even more strongly, that we're likely to get a rate cut in about 5 weeks from now. And what's surprising to me about that is a bump in inflation. That would weaken the argument that the Fed should be cutting rates. And the whole point of raising rates is to fight inflation. And we haven't seen, I would argue, we haven't seen enough to indicate that the employment situation is really falling apart. So overall, how I would interpret that is the markets don't really believe that inflation is here to stay and that the economy is in trouble. Again, time will tell. Good luck out there, everybody. Talk to you soon.